Good evening, all. This is Shea Horowitz, ShogunTrading.com. This is our free weekly newsletter. Hope you had a great weekend. This is going to be a different type of week this week. We have Labor Day weekend this weekend, which means that the market is going to be closed on Monday. Friday is going to be extremely slow. People are going to be taking off early. Thursday is going to be very slow. Prepare for a very, very slow week this week. It's gonna seem like it's gonna last forever. We also have the Democratic Convention this week. Lots of news coming out from both camps. It's going to be very, very interesting with lots of drama and lots of big words being thrown around. So it's going to be very, very entertaining. Olympics are over. Hope you enjoyed them. That shakes up the world as well. The whole Russia-Georgia thing is shaking up the oil world as well. China, we have to see how China is coming out of the Olympics. What kind of demand they have for world resources after the Olympics, and that's something that the market is going to be looking at. This is S&P 500, and you can see we came out of a very nice downtrend that we talked about, and then we had a very, very nice wedge-shaped consolidation that we talked about, and then we talked about a breakout, and it broke out to the upside, pulled back like we thought it would, and then it failed to continue to the upside. It didn't do that. Instead, it went to the downside, and then it failed to continue and went back up. In other words, it got completely confused on both sides, didn't break out to the upside, didn't break out to the downside. The market itself has not moved since beginning of July. This is July and August. We have been basically sideways for 2 months now. That does not mean that there's not profits to be had. There's quite a bit of sector rotation going on. There's the financial sector. There's the natural resources sector that are really in play right now. There's also the semiconductors that are working very well for us right now, because this is a picture of the S&P 500. This is a picture of the NDX, the NASDAQ 100, and you can see the NASDAQ 100 did break out of its consolidation and did do pretty well on the upside. So that's basically what we've been trading. We've been trading, the Cypress Semiconductors, for example, on the upside. You can't get much more. So semiconductors, the stock that's called semiconductor. We've been trading the short side. For example, SLM that we shorted around the 50.99 and went down with it. We've been trading some China stuff. China DEX, for example. That's working out very well for us from 1442 all the way down. We also traded some of the metals, for example, titanium. We've been trading more on the short side, from 1441 down to 13. Well, what we're doing right now is we're nibbling. We're looking for quick profits all over the place. If you take a stock from $15.99 all the way down to the $12 level, it's substantial enough that where it makes you profits, it makes you money on a short-term basis, and those short-term profits accumulate, and that's what a lot of investors are unable to integrate into their trading system is the short-term profits. Let me put it this way. You know the story about a penny that doubles every day versus $1 million. You'd always choose the penny that doubles every day, and that's where short-term profits come in. If you make 1% on your money on a daily basis, it is more than 20% per month. It's a lot more than 20% per month because you're growing it on a daily basis. So if you can get those consistent profits, if you can manage your money correctly, if you can reduce your stops, reduce your risk as much as possible, you're that much better off. So whenever you have a stock like this, it went from $15.99 down to $12 in 2 days. It's quite substantial, quite good, and it really, really helps your P&L. The trick to everything, of course, is extreme money management. That means that the stock is either working for you or it's not. There's no counseling the stock. There's no trying to coach the stock or hope or pray or anything along those lines. If it's working for you, it's working for you. If it's not working for you, you get out. But if it is working for you, you want to ride it as much as possible. The whole goal behind trading right now is to make those short-term profits, because the long-term profits, when the market is doing this, do not exist. You can't really buy a stock right now. I mean, some stocks do exist, but not in general terms. You can't really buy a stock right now that they'll move, 50% over a month. Not right now. The majority of stocks are not going to be able to do it. If you find a specific stock with a cool news story or whatever, maybe. But in general terms, as far as trading is concerned, that's not what you want to do. Whenever the market is going into this kind of traffic jam, you want to reduce gears. Think about this as a traffic jam. You want to reduce gear. You want to be first gear, second gear, and you want to take profits and keep your foot on the brake. When the market is in a long-term trend like this, that's when you want to shift up to fifth gear and just hang on and cruise with it. So remember, this is short-term trading. This is long-term trading. What we're looking for right now, of course, is a breakout to either to the upside or to the downside. And I'm not really sure which way it's going to happen. I'm going to have to wait for the market because it's not really giving good indication to either way. But whenever it does start taking off, that's when you start shifting up and hold your position much, much longer. But for now, it's the short-term trading, the rules. Or you sit on the sidelines. It's up to you. Let me see. A couple things that I want to talk about. Oil. Oil came down, and we did very well when oil was coming down. For example, we did UAUA. We bought UAUA right at this level, and it went all the way up to the 1584 for us. AMR, same thing. It also worked from 10 all the way up to the $13 level. And that was basically based on oil. So whenever oil goes down, airlines go up. That's pretty self-explanatory. We also saw that a serious bounce in the commodities on Thursday, and then on Friday, of course, they pulled back. But on Thursday, we made really good money on the long side, and we made 2%, 2%, 2%, 2%, which worked pretty well. It did pull back on Friday more than I thought it would, and we'll have to see how that goes. If oil breaks the support level, the 111 expected to keep coming down, and even 100. 100 is considered cheap right now, even though I still think 100 is very, very expensive for oil. It is considered cheap, and the market should propel forward. Bernanke did come out and say that he thinks that the risk for inflation is going to slow down into 2009, which is very nice. So, in my opinion, things are looking up. This is the home builder sector from the S&P 500. You can see the run on the home builders, and then the bounce, and now we're making higher bottoms again, which is very encouraging for the real estate market. And I think that our economy is all about the real estate market right now. If we see oil pulling back, home builders coming back up, maybe we'll have the end of the snowball effect of the financial crisis. We'll have to see. But that's pretty long-term outlook. What I'm looking for right now is the next week. The next week I'm looking for hit and run. I'm looking for short-term trades. I'm looking for the 2%, 5% moves, and I'm out. If I get more, great. If I don't, I'm going to be coming out of them very, very quickly. It's going to be an interesting week. Don't forget that it's a holiday weekend. Have a great week. Remember to shift gears with the market, and I will talk to you next weekend. Take care.